There's something in the methodology I discovered, and again, this is something I actually created. It's called the confirmation signal. The confirmation signal tells you that when something gets above a previous high, meaning people think it's a breakout, you need to see 2 consecutive higher closes for it to actually be considered a breakout.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin.
Let's start with the mental game, because I know you've said that discipline and focus are essential, and you've often mentioned the importance of having a defined set of rules for trading. So Gareth, what are those trading rules that you live by?
Absolutely, and you're so right about that, is that the technicals, learning the charts, that's something that anyone can do, and it's something that I can teach anyone to do. The mindset is something that we each have to work on ourselves. So, for instance, you have to be super disciplined. You can't FOMO into positions. You have to have a regimented rule set about when you enter a trade. So, for instance, when I teach my methodology to my traders, it's very strict. It's 2 to 3 factors. 2 to 3 factors aren't just, oh, I like it, or, oh, I think it's gonna go up. It's specific, detailed, technical factors that align at the same price point that gives you the signal to either buy or short a stock or a cryptocurrency or even a commodity. And so these are the things that as a disciplined trader you have to abide by. You are going to get tested. The markets will test you. Twitter, social media, they will test you. You'll see people chasing something. You're going to want to chase it. You need to hold your horses, kind of regain your composure, and be steadfast in terms of not chasing positions. All right, chasing is the ultimate sin in investing. It will lead to losses. All right, so again, when it comes to mindset, you have to be so strong in mindset that you don't let yourself waver on anything. The most disciplined traders are usually the traders that trade less, and they ultimately make a lot more in money and profits.
But firstly, why don't you walk us through a specific successful trade that you've made in the past and the technical analysis that supported those decisions along the way?
Absolutely. So if we look at my chart here, we have a chart where this is the chart of Bitcoin, and it's probably the most famous call that I ever made when we were at near 69,000. I said, guys, don't trust this. Everyone else was extremely bullish on Bitcoin, saying it was going to be 100,000 by the end of November, and then 200, 500,000 after. I looked at the chart and I saw multiple signals telling me that it was going to be a reversal and most likely a cycle top. So the first thing is to take a look here. If we draw a trend line from that first high, which was around 65,000, and we bring it right across, notice how price on Bitcoin did get above a couple times. Okay, now most people would say, oh, that's a breakout, right? And that's the common theme that we saw, is people saying, oh, it broke above the previous high, now it can go to 100,000. There's something in the methodology I discovered, and again, this is something I actually created. It's called the confirmation signal. The confirmation signal tells you that when something gets above a previous high, meaning people think it's a breakout, you need to see 2 consecutive higher closes for it to actually be considered a breakout. The reason is because algorithms and institutions will play games. They'll push something above a previous high, ultimately to reverse it, knowing that a lot of people will get stopped out on their shorts when it goes above that high, and then also people will go long when it breaks that high. So it's a way of getting most people on the wrong side of the trade, and institutions do this nonstop with stocks, cryptocurrencies, and etc. All right, so what we see here is you got to close above, and then you reversed back down. You got over here a close above, and you ultimately never got a secondary close higher. These were all games by big money, keeping it and kind of getting people to be on the wrong side before reversing. Now that's just part of it. Number 2, you had an RSI negative divergence out there that was massive going on here from this high to this high. You had a higher high, but the RSI was actually declining from those 2 periods. You also had sentiment indicators going on where you had mass euphoria of double top kind of nature, that if you study psychology and you study human nature, it was telling you that this was the end of a run, not the beginning of a bigger breakout. I could go into another 10 factors on this chart, but the bottom line is that when you learn the charts, think about this. A chart with which most people look at, even you, Michelle, you might look at a chart, you have some background, but for the most part, it's like, okay, well, what the heck is it telling me? It looks like a foreign language. when you learn how to read the charts, you start translating the charts into the English language or whatever language you are accustomed to. And they do start speaking to you, and you can start to garner information that most people will have no clue about. It is unbelievably powerful. So this was a great call, and again, it was something that the charts were alerting me to.
Okay, so let's break that down a little bit. How do you identify the key support and resistance levels? Are there any particular tools or indicators that you've used that have been more reliable than others in the past?
Yeah, so the biggest thing for me, and I keep it very simple, if you look at my charts, I have a few trend lines on it. Occasionally I'll use Fibonacci retrace. I think Fibonacci, one of the things I love about Fibonacci is that it occurs naturally in nature, right? So the Fibonacci sequence in the petals on a flower, it's in a Fibonacci sequence. The rings on a tree, when you cut down a tree, Fibonacci sequence. So what I'm a believer in is that we are part, as people, as humans, we are part of something bigger on this planet, and we are affected by things like nature is. And so therefore, things that replicate in nature will most likely have an impact on us, and therefore whether or not we're a buyer or seller. One of the things I love to tell people is that, people say, oh, the lunar cycles have no impact, this is just astrology and like all this nonsense. But think about it like this. We as humans are 80% water. Okay, the moon affects the tides. All the tides on the earth go in and out based on the moon. If we are 80% water, it makes sense that there's a little bit of an impact. Now, is it so much where I notice that I'm feeling different when the tides are going out or in? No. But if you map that across 1 million, 100 million investors, the slightest change in sentiment can actually be something bigger when it's mapped out amongst 100 million investors out there. So again, being aware of this kind of stuff, it is important. It's not an end-all be-all, but it's part of the puzzle that as investors, we put together to give us an edge. And I'm proof that that edge exists, folks. I've taught thousands of traders, hundreds of thousands of traders how to make money.
So you look at lunar cycles and which stars are in alignment? I mean, you've mentioned astrology. How big a part does that play?
It's only a minor part. It's probably a relatively small part, but it is a part that you have to figure out and you have to utilize. So for instance, if I'm looking at a chart and I say, okay, there's a double top here. We have a trend line sloping at this same level. This is also a topping tail. So I already have multiple factors. And then I look at the lunar cycle and I'm saying, okay, this is coexisting with a lunar cycle right here, or Mercury retrograde or something like that, then I do say, okay, that adds additional compliance for my level. And what it does is it gives me extra confidence. And so it's about bringing those probabilities up. So a trade with two factors, for instance, what I say is it's 70 to 80% success rate. That's proven by my track records that are out there available for everyone to see. If I can add an additional factor or two, my probabilities go up towards 80+%. So every little bit of additional kind of accent that you can get to the chart is going to raise that probability of success. And that's really what my goal is. My goal is to have as many winners as possible with as little risk as possible. So the patterns, you're right. The patterns, there's many patterns out there. There's bull flags, there's bear flags. What I do what I teach people to do is there's specific criteria. So a lot of people will look and say, oh, it's a head and shoulders. And the bottom line is a head and shoulders means almost nothing unless the neckline breaks. And again, what I can do here on the chart, let's just go right into this here, because there was a head and shoulders chart that we had on the Bitcoin chart back in 2021, and it was an absolute perfect thing. And I'm going to show this right now to you guys to get you a sense, all right? So right here is your neckline, and I want to show you here. Let me click on this, and we'll bring up the trend lines, all right? So shoulder here, then up here to your head. This is your head across here. And there's your other shoulder forming right there. Now, this is what's so freaking exciting about this, is that now you have your head and shoulders. Back in 2021 and called this out. And I said, guys, the price target of this head and shoulder pattern is a 30,000 handle on it. Now, I want to show you why. So my target was 30,000. So what you can end up doing here, and I'm going to show this again on the chart, is that if you take the highest point of a head and shoulders and you drag it down to the neckline right here, and then you take the break down here, okay? Look at this. It's identical. So basically what I'm telling you now is that when a head and shoulder, so first of all, this is a head and shoulder, but it doesn't matter until it breaks the neckline, which is right here. Once it breaks the neckline, you can then calculate the exact target of where this should fall. And in this case with Bitcoin, literally it was within 50 bucks of the target of Bitcoin, and it went right there before bouncing back. I actually did a trade on this and it worked out beautifully, but this is the power of what I teach. There are so many books out there that says, oh, here's a head and shoulders. Okay, well, what do you do? Who cares? The bottom line is, do you know how to use it correctly? So for instance, topping tails, you get a topping tail on the chart. It doesn't necessarily signal a short sell on the equity or the crypto. You need to know when to enter and when to exit. And that's again what I teach. And that's the game changer, right? It's knowing when to put your money into a trade and when to extract it.